Welcome to Shared Lunch, a podcast from Sharesies with BusinessDesk. Today on the podcast, we're talking currency and the Kiwi dollar with Jarrod Kerr, Chief Economist at Kiwibank.
Yes, I think the New Zealand dollar can continue to fall, and at best it would remain quite choppy, I think, over the rest of the year.
My name is Dan Brunskill, markets reporter for BusinessDesk. Welcome to the show, Jarrod.
Kia ora.
Such a pleasure to have you on. I hear you are a bit of a currency market enthusiast, and before you were an economist, you spent a lot of time as a strategist. What do you like about currencies?
Oh, look, I like financial markets in general. They are that much further ahead of the economic data. You really get a good handle on what investors are thinking, the sentiment that's out there, and of course the risks to economic growth up and down. And at the moment, we're going through substantial volatility in financial markets. So it's actually quite exciting for someone like me.
Mm-hmm. I'm always quite compelled by how financial markets take all of the disparate things happening in the world and calculate them down into a trackable number that goes up or down or left or right. I find that quite compelling. It sort of helps you understand the world in a small way.
Yeah, I agree. I mean, when you think about it, there are thousands and thousands of people trading in financial markets, and they're taking all that information that's available, digesting it, and thinking about what's going to happen in the future, and sort of putting that into prices and volatility.
Yeah, it's interesting. You should talk about volatility because it seems to be the theme of the past 2 to 3 years. It feels like not very long ago that the Kiwi dollar was pretty strong. It was trading over 70 US cents, and people were talking about it going higher. The conversation was almost how high can it go? But this morning it was trading at 57 US cents. It sort of went as low as 55.7 US cents. What went wrong? What changed? Why has it gone from 70 cents to 50 cents to 50 cents?
Yeah, so we were at 70 cents just in March, so not that long ago. The Reserve Bank of New Zealand was one of the first central banks to start lifting interest rates, and as they did that late last year, the Kiwi dollar was that much more attractive for international investors. And then 6 months later, the US Federal Reserve started lifting interest rates and quite aggressively. The Fed has been very aggressive in its movement in monetary policy, and we've seen the interest rate differentials between us and the United States fall quite substantially. So, the attractiveness of the Kiwi dollar is not there anymore, and we've seen the currency get hit quite hard. And also, global sentiment has changed. So when investors get nervous, they tend to put their money into US dollars and out of more risky currencies like the Kiwi and the Aussie dollar. So that really has driven our currency lower.
Mhm. So in March, New Zealand was paying a higher interest rate than, say, the States and other countries, and our dollar was stronger. Now the US Fed has kind of caught up somewhat on interest rates, and New Zealand just looking less attractive.
Yeah, so our interest rates not that long ago were 1.5% above what you'd get in the United States. So that's quite attractive to international investors. You're picking up that extra 150 basis points by putting your money in New Zealand. Now that difference is getting close to zero. So there's no compensation to come out to New Zealand. You might as well just keep your money in dollars, and that's what we're seeing.
Hmm. And just to help me understand, when you were getting that interest rate, you're taking your US dollars or whatever your home currency is, converting it into New Zealand dollars, and then buying a bond or buying a security in New Zealand. That's the process that drives the demand for the New Zealand dollars.
Yeah, absolutely right. There's not much really to add to that. They call it the carry trade. So you're actually picking up, a higher yield in New Zealand compared to, say, Japan, which, Japanese investors represent about a third of the ownership of Kiwi bonds. So we get a lot of money coming out of Japan where interest rates are close to zero and negative at times, and they come out here and pick up um, substantially higher interest rates.
Mhm. So that like yield differential, that's the maybe the number one factor. But what are other factors that set the value of a currency or decide if a currency is worth more or less relative to others?
Yeah, I think the interest rate differential is probably the, the most pure measure of where a currency should or should not go. You also have our terms of trade, our export prices relative to our import prices. New Zealand, Australia, and Canada are considered commodity currencies because we've got such large commodity exports. So what's happening to dairy prices, meat prices, and the like does actually have an influence on our currency. So the fact that our export prices have come off a little bit recently is also fueling that sentiment to sort of get out of Kiwi. We are considered, riskier, more volatile currencies than most, and we are more volatile than most of the top 10 traded currencies. So when risk sentiment turns and people get worried about the future and worried about financial markets, you tend to drop the Aussie and Kiwi currency and go into more safe haven currencies like the US dollar, the Swiss franc, and even the yen. So those are I guess, the main drivers. But then other things like our trade balance, how much of a current account deficit do we have, also feeds into investor sentiment.
Mhm. And is it our link to commodities that makes us considered a riskier currency, and that commodity prices might fluctuate and the value of our currency might fluctuate? Is it that, or is it just that people prefer the US dollar?
Well, basically, the US dollar is the global reserve currency. So if
Mhm.
anything really bad is happening, you tend to see investors putting their money in dollars, and that can be anything. By the way, it can be a financial market meltdown. It can be a war that
Mhm.
we've seen recently. It can be a number of reasons why people want to put their money in a very safe place, and we do see that in the yen and Swiss franc um, as well. So yeah, I think the fact that we are a small open economy that's heavily influenced by global growth, we are traded accordingly.
Mhm. One thing I've been told is that despite being a pretty small economy, we're one of the top 10 most traded currencies. Definitely not one of the top 10 biggest economies. And that sometimes leads to liquidity problems, basically how many dollars there are to trade, and often means that our fluctuations are more dramatic than some bigger economies. Is that the case?
Yeah, that is the case. Of the top 10, traded currencies, I think we are the 10th, and
Hmm.
Australia is about the seventh or something like that. We do have an outsized interest in our currencies, and that's because we're also traded as a bit of a proxy to Asia. We've got big links to China and Asia through our trading, and it's more difficult to express a view in Asian currencies, particularly China. So, the investors do see Kiwi and Aussie currencies as a bit of a proxy for the region, something that has a lot more liquidity and is easier to get in and out of. So that sort of risk sentiment that I mentioned before does really play on our currencies, and we are heavily traded for the size of our country.
Hmm. That's there's an interesting thing where we're used to talking about stocks or house prices going down being bad, going up being good. That's not exactly quite so simple with a currency, is it? Is having a weak currency a bad thing? Unpack that for me.
Yeah, look, it's funny. It depends on what's going on. It wasn't that long ago that the Reserve Bank of New Zealand was threatening intervention to get the currency lower. They wanted the currency lower because it was too strong, and we wanted to help fuel our exports. Now we've got the currency dropping quite substantially, and that is fantastic for our export sector, for Fonterras and these big goods exporters. But also, it's going to be a really nice shot in the arm for our tourism industry. New Zealand's basically gone on sale. We've basically had an 18% discount to come and visit New Zealand. So that's very good, and it's good for our economy. problem is we're in a situation where we've got very high inflation. So the fall in our currency is not good for importers. You've lost a lot of purchasing power, and the goods and services that you're importing from overseas have just become that much more expensive. So unfortunately, we're going to feel that at the shops, and with food prices as well. So at a time when inflation's already very high, this fall in the currency is just that much more frustrating.
Okay, so it's going to fuel inflation. It'll make things a little bit more expensive when we're buying imported stuff. Our iPhones will
Yeah.
cost more, but our exporters, tourism, milk, dairy, those guys are going to be able to sell more because they're effectively selling it cheaper overseas.
Yeah, precisely.
Yeah.
So, Fonterra is a classic example of a firm, a really good firm that earns a lot of US dollars. They also
Mhm.
earn other currencies, but they earn a lot of US dollars. So they're forever selling US dollars and buying Kiwi dollars to convert it back in. And at the moment, that US dollar's risen 20% this year. So compared to the Kiwi. So, you're getting that much more bang for buck as an exporter.
Yeah. Yeah. Okay, interesting. And because New Zealand, I believe, is a net export economy, would it be fair to say that a low dollar is sort of net a good thing for New Zealand, or does the inflation aspect just make that too tricky to say?
Yeah, it's definitely a net positive in terms of our exports, and that's great. Like I said, the problem at this particular point in time is that inflation's very high. If
Hmm.
inflation was low, like it was over the last 10 years, then we'd be, clapping and cheering on the decline in the currency, because that would be, helping our economic situation. But at the moment, because we've got high inflation, it's just frustrating our outlook for inflation.
Okay, interesting. So if it's making inflation worse, and maybe we would like the Kiwi dollar to have a bit more strength, when could that happen? Do you think this decline is going to keep going on, or are there some situations that could make it turn around? What's the sort of outlook?
Yeah, so I think in the current situation with the volatility, the fact that markets are starting to price in recessions, particularly in Europe, but also the risk of a recession in the US, I think the New Zealand dollar can continue to fall. And at best, it would remain quite choppy, I think, over the rest of the year. And hopefully, things have turned around enough next year that our central bank will be one of the first to stop lifting interest rates. And hopefully, we'll see a bit more of a stabilization in our currency. And then, towards the back end of next year, I would expect to see the currency starting to appreciate again.
Okay, but the back end of next year, sort of well
Yeah,
more than
so I
12
think
months away.
we're in a pretty choppy range for
Mhm.
a while as the global economy goes through a very awkward period, and our economy as
Mhm.
well is going to go through a very awkward period of a resurgence in tourism, which is fantastic, but very weak household consumption over the next little while because of the cost of living crisis, because interest rates are rising, and just simply the sentiment out there with house prices falling is hurting the outlook for consumption. So we're also going to go through quite an awkward period of economic growth.
Yeah, yeah. Interesting talking about economic growth. The British government announced a plan to stimulate some economic growth this week, which had some perhaps unintended consequences. Can you help us unpack what happened there, and why the British pound took such a nosedive?
Yeah, there's nothing like unfunded massive tax cuts for financial markets to get their minds around. And what we've seen is UK gilts, their bonds, they have fallen in price, and that's lifted their interest rates. And that's investors basically going on strike and saying, you want to do something we don't agree with in government policy, well, we're going to punish you for that. So they sell government bonds in the UK, rip their money out and put it elsewhere, and you've seen the pound getting pounded. It's been hit very hard, particularly in the last few weeks. So you have seen, traders, I guess, expressing their concern with the government policy and exiting. Now you've also had the Bank of England, the central bank, coming in and saying, "Oh God, that this volatility in financial markets is too much. We're going to come in and start buying those bonds investors are throwing back at us to try and stabilize things." So it's really extraordinary times in Europe, and it's obviously not just the UK, but also the war in Ukraine, and the threats to gas and energy prices. It really is a tough period for people on the European continent.
Yeah. In New Zealand, we're sort of heading into an election year next year, and one party wants tax cuts, and the other party is sort of seemingly happy to do some keep spending despite the inflationary environment and different policies. It's a very different case to the UK. But is there any risk that government policy could trigger a similar sort of reaction here in New Zealand?
I don't think so. I don't see either side of politics doing something as drastic as what we've seen in the UK. The government is looking to do more targeted initiatives and spending. A lot of what they've announced, or everything that they've announced so far, has been factored into financial markets. So it'll be interesting to see what sort of lolly scramble they come up with next year to try and protect votes. We could see a slight deterioration in the outlook, but New Zealand has really low debt compared to our peers. Really low debt as a percentage of GDP. So the government can afford to be a little more, open and that in their spending, because we're coming off such a low base of debt.
Yeah. Okay.
That's public debt, by the way. We've got a lot of private debt, but
Yep.
public debt, government debt's very low.
The price of houses in this country almost ends up
Correct.
insisting you have enormous debt.
Yeah.
No other way to do it. Okay, interesting. This is loosely an investment podcast. When investors are thinking about currency changes and how it might affect their portfolios or their personal finances, what are some things investors could be or should be thinking about in terms of currency movements?
Well, I mean, right now is a classic example of those investors who've got a more diversified, more global portfolio, and I know a lot of Kiwi investors do put their money in US stocks and US assets. So even though those stock values have been hit quite hard, there has been a bit of currency support. So the value of your US dollar assets have gone up 20% on the currency, sorry, even though they've fallen. So that diversification has this time around. And the New Zealand share market's actually outperformed all of Asia in recent times. So there's a bit of give and take. When you do put money offshore, you are taking on currency risk, right? So if the New Zealand dollar goes up, that also works against the gains that you're making overseas. So it's part of a balanced, diversified portfolio for sure. And you must think about the currency risks that can play out.
Yeah. Even though US stocks, people's portfolio might have gone down quite a lot, the fact that New Zealand dollar has also gone down softens that blow.
Yeah, bang on.
It can go the other way.
Yeah.
But yeah. Okay, it's super interesting. Then in terms of this, we often talk about the declining New Zealand dollar. In reality, or often what it is actually just a strengthening US that we're kind of talking about as much as the bit of a much of a but and a lot of that is due to the incredible amount of uncertainty. And then, as you say, interest rate differentials. The Japanese yen is traditionally a safe haven, but because their interest rates are so low, people aren't that keen to go there. Do you think that until the global geo-economic environment settles down somewhat, we're going to keep seeing that really strong US dollar, and that could be quite a long time?
Yeah, you touched on the yen, and the yen has been one of the most heavily hit currencies. So most currencies have, fallen around 15 to 20% against a US dollar, which has risen, around 20%. The Japanese yen has fallen 40% um, in a very short space of time, and that is because central banks in the world are lifting interest rates to try and get on top of inflation, whereas the Japanese have kept their interest rate settings unchanged at very, very low levels. So that willingness to take your money out of yen, put it overseas, has just increased. So we've seen some massive selling in the yen, which is fascinating, and their central banks looking at currency intervention. So to try and support their currency, they are selling their reserves in the US, bringing it back, trying to push the yen higher. So that is probably one of the more interesting currencies at the moment, and it just shows you the amount of volatility out there. As most central banks, excluding Japan, excluding China, are lifting their interest rates quite quickly to try and get on top of inflation.
Mm-hmm. I think we should go to list the questions in a minute, but I have one more before we do. We often talk about the US dollar and compare the Kiwi to the US because it is the global reserve currency. But we also have this, the TWI, the trade weighted index, which is sort of how the New Zealand dollar is performing against our biggest trade partners. That's
Yeah.
fallen less. Should we think about that more than we think about the US dollar, or kind of how does the TWI fit into the picture?
Yeah, I think great point and a really good question. Our TWI has fallen sort of 7 to 10%, whereas our New Zealand dollar against the dollar has fallen, much more. And what that tells you is that a lot of our other currencies, or most other currencies, are falling against the US dollar as well. So, the trade weighted index is a good way to look at it because it's weighted by the amount of trade do with different countries. So it is a a nicer way to think about how the Kiwi dollar is performing. So our Kiwi dollar has fallen, but not as much on a trade weighted basis, which I think is a good way to think about it.
Mm-hmm. And potentially is the number that the Reserve Bank is thinking about, and that's the number predicting inflation.
Yeah, yeah. So they'll be they look at both the Kiwi dollar and the TWI. They look at the TWI, I think, more
Okay.
with more I've run out of words, but they definitely I guess favour TWI, and what they will do coming into November is they will update their forecast model, and they basically plug the TWI into that, and the fact that the TWI has fallen means that their model will spit out a higher tradables inflation number, which is why I think we're talking financial markets about even more RBNZ rate hikes, which will further hurt households and businesses.
Yeah. Yeah. Interesting. Okay. The first question we've canvassed already, so maybe you can just give a one sentence answer. But what is the future of NZD versus USD?
I think there's definitely more downside near term. I think over the medium term we'll see that the currency strengthen again into the 60s and potentially 70s, but that's a story for another day. Right here, right now, with all the volatility in financial markets, I can see most currencies continuing to depreciate against the dollar.
Mm-hmm. Okay. Next question. New Zealand has a larger current account deficit than the UK. Government is spendthrift. Are we next in line for a disorderly currency and bond sell-off?
Yeah, I think we sort of covered this a little bit before, but
Mm-hmm.
the shift in the UK was obviously quite dramatic. I don't think we'll see that sort of dramatic shift in government policy here. We'll get little bits and pieces around the edges, So the current account deficit, whoever asked that question is correctly pointed that out as a longer term driver of currencies, and the fact that our current account has worsened recently is also weighing on the Kiwi dollar right now. We're expecting the current account deficit to improve, particularly as household consumption, comes off and the amount of imports that we bring in off as well. That net export equation will look better going into the year. But it's a very good point. The relative trade balance is an important thing to look at. So is relative debt, and we've got much less debt, a lot less than the UK and most other countries around the world. Australia's at 75% of GDP. New Zealand at less than 40% and declining. So the US has got 100%, and those crazy Japanese officials have got 260% of GDP worth of debt, which kind of blows your mind out the back of your head when you hear numbers like that.
Yeah, so a lot more for error in New Zealand. Here's a question, Jarrod, that might open a little bit of a can of worms. I'm not sure of your view.
I'll skip it then.
No, you'll love it. You'll love it. Is crypto a relevant factor for our economy in the near or not so near future? You have a view on that?
Yeah, I really struggle to get my mind around crypto. I'm sorry, I really struggle to think about whether it's the absolute game changer or not. I do think we're going to see cryptocurrencies in the future. I think it is part of our future. I don't know whether it's going to be a Bitcoin or any of those others, or whether it's going to be central bank backed cryptocurrency, because there's a bit of irony there for me. Part of the reason you buy a crypto is that you're trying to get out of government and central bank managed currencies, right? You don't believe in the fiat system. You think you put more value in a crypto. Ironically, in order for these cryptos to really take off, like a Bitcoin, you need companies and countries to come out and endorse them as being, legitimate. And there's the irony, right? So I think it's particularly difficult for me to get my mind around cryptos. But I do think that there is going to be something that we evolve into over time. I just don't know how that looks.
I've been very interested in how, as the crypto market develops, the more and more it starts to look like the traditional finance industry, just with a few innovations or a little bit less regulation, and regulations come in and turn it more and more into the traditional economy. So it's a little bit interesting. It's getting bigger and bigger and more mainstream, but less and less distinguished from traditional financial markets in many ways. So I'll be interested to see if that trend continues.
Yeah.
But I'm no
One thing I think's interesting about cryptos is that, when I started out, I learnt quickly that gold is one of those safe haven assets that we talk about. And in bad times, people put money in gold, or in periods of very high inflation, which we've got at the moment, people put their money in gold because they want to get out of the more mainstream system. We haven't seen gold rise that much with the current rate of global inflation. So I think crypto may be playing more of a role of people, thinking about alternative assets with current volatility.
Yeah, definitely a lot of former.
Yeah.
Definitely a lot of former gold bugs, as you might say, are now Bitcoin buyers.
Yeah.
One to watch. Okay, thank you for weighing in. Appreciate that. Slightly outside of the purview, perhaps, but always interesting. Neil asks, given the NZD is always in the same basket as other commodity currencies, with the AUD or the Australian dollar or the Canadian dollar, why has there been such a strong decline by comparison for New Zealand dollar? Why are we tracking behind the Australians and the Canadians?
Yeah. So that unfortunately goes with the larger driver of the currency, which is interest rate differentials. So has been declines in commodity prices, which have weighed down all three or more, more of those commodity currencies. But why the Australian dollar has outperformed the Kiwi dollar is, again, New Zealanders started first. We were first cab off the rank in terms of rate hikes, and we saw the Kiwi dollar appreciate against the Aussie, and then the Australian came in 6 months later and started lifting interest rates. Again, that interest rate differential was a big driver, and we've seen the New Zealand dollar fall against the Aussie dollar since the RBA started coming in and lifting interest rates 6 months behind the RBNZ. So that interest rate differential is more dominant, and then the commodity price falls have been interesting. Plus, in Australia, they've had quite large falls in the price of iron ore, which is one of their largest exports. But then some of their other export prices haven't fallen by anywhere near as much, particularly now that Australia is a massive um, LNG producer.
Interesting. Yeah, I think someone described it to me recently as sort of the New Zealand dollar reaching parity or nearly reaching parity with the Australian dollar. That was the anomaly rather than the level we're at now. The level we're at
Yeah,
now is somewhere near a historic average.
yeah, absolutely. It's much more normal than when we were when the Kiwi dollar actually touched parody, and I sent a very stern email to all my mates in Australia that we actually got there.
Yep.
So we've never touched parity before, so that was quite exciting that we did get there for a very short period of time. But that is very much the anomaly, and I think off the top of my head, the average for Aussie Kiwi is around 115, 120, and I think we're at
Mhm.
113 at the moment.
Yeah. Right. So actually, like relatively near a fairly normal level.
Yeah.
Another potentially controversial question, but I think it's okay. A poll suggests a national act could win the government in 2023 as the election comes closer, and if the polls continue to indicate a national act potential government, do you think the New Zealand dollar would strengthen? And if I can ask more generally, do elections have impact on financial markets?
So just the second half of that question first, the elections in New Zealand and Australia and most developed economies are quite centralist. So you'll have a Labor or National, and they're not too far away, compared to some of the results we're getting in other countries where you're getting really polarized, quite extreme views. So the financial market reaction to Australian and New Zealand elections has basically declined since the 80s and 90s, where you were getting quite
Mhm.
big divergent views. So the impact will not be huge. Markets generally tend to favour right wing uh, governments over left wing, although even that difference isn't huge anymore. So you would argue, based on historics, that you might get a bit more of a gain under National/Act than you would in return in Labor, but I don't think it would be enough to even put a trade on. Um, I think it would just be a relatively muted reaction.
Right. Yeah. So not something that's dominating any trader's minds.
No, I mean we'll get excited about it. I remember being on the trading floor in Australia not that long ago when they had a hung parliament, right?
Hmm.
That's pretty dramatic stuff, and the Aussie dollar didn't do much at all. You would have
Right.
expected the Aussie dollar to be hit really hard by something as dramatic as a hung parliament for a couple of weeks, but people sort of looked through it and thought this is a very developed market, nothing overly extreme is going to happen. I haven't lost my faith in the Aussie dollar, and you could say the same thing about the Kiwi dollar, right? National gets in, Labor gets in,
Hmm.
no one's losing faith in the government.
Hmm. Jarrod, what is it like on a trading floor? Do you have two phones to your head? Are you shouting down the line? Is it crazy? What's the vibe?
If I was a trader, yeah, sometimes you get the two phones going on, and there's a lot of shouting, particularly in times of volatility. It can get very exciting very quickly, and a lot of money is made and lost on trading floors and very quick and very quickly. I've found trading floors to be the most exciting places to work, just because of that vibe, and things happening so quickly. No day is the same as the last, and you have to find yourself becoming a bit of an expert on things that develop. So
Hmm.
you have an earthquake in Canterbury, for example, and financial markets are all over the show trying to figure out what that is. You have a war in Ukraine, you have all these different things coming up on a daily basis, and you have to get on top of what it means for financial markets quite quickly. And COVID hit, and no one had any idea. We haven't seen anything like it in 100 years. So yeah, there's a lot of
Hmm.
fun.
Seems a little like an extreme sport. I'm sure you go home tired at the end of the day.
Yeah,
Somebody asks, do we need to return to the gold standard?
I don't think so. We left the gold standard for a reason. Um, I think the way interest rates have performed since we've started um, floating our currencies in the 80s has taken a lot of volatility away from interest rates. So prior, you used to have a lot more volatility in interest rates and less volatility in currencies. Now that we're floating, a currency does quite a bit of the work for or against um, that country involved, and it has meant that the movement in interest rates basically since the 80s hasn't been anywhere near as volatile because the currency's doing a lot of the work on the side.
Yeah. I must admit, I feel no desire to return to the gold standard myself. That's probably about all we have time for. Jarrod, thank you so much for coming on the show. We super appreciate your insights, and it's been incredibly interesting.
Thank you very much for having me.
Thanks for listening, and a big thanks to Jarrod for joining us. If you're not following the podcast, you can do so on Apple or Spotify or wherever you get your podcasts. Leave us a rating and a comment with who and what you'd like to hear about. Shared Lunch is back next week. You can register for that discussion on Crowdcast so you can hear the conversations play out in real time and get your questions answered on air. The link is in our podcast description. Until next time, enjoy the rest of your week and stay safe.